So, you think you have money in your wallet? Think again. What you actually have is a collection of fancy papers and metal tokens that a bunch of people agreed to pretend is worth something. Sounds like a massive multiplayer game, doesn't it? Welcome to the world of fiat currency, where the rules are made up and the points don't matter. Except these points control the global economy. Fiat currency, for those not in the loop, is government-issued currency that isn't backed by a physical commodity, like gold. Instead, it's backed by your trust in the government. Yes, that's right. Your late-night anxiety about government stability has a direct line to your wallet's worth. Let's unpack this suitcase of invisible money and see what's really inside. In this light-hearted escapade through the world of money, we'll explore its amusing past, its omnipresent yet invisible current state, and the exciting, or possibly terrifying, future. Buckle up, because economics is about to get a lot less dull. Long before the dollar, the euro, or even the concept of a bank account, there were some pretty creative ways humans traded goods. We started with bartering, swapping onions for chickens. But then, things got wild. Shells, beads, and even large stones were used as currency. Imagine trying to fit that in your wallet. As societies grew, the need for a more practical currency did as well. Enter metal coins, and eventually paper money, first used by the Chinese during the Tang dynasty. This was revolutionary because it was so much easier to carry paper than, say, a herd of cattle for your weekend shopping. But even this paper had actual value, backed by precious metals, a far cry from today's confidence game. Fast forward a few centuries, and the world decided that backing money with gold was too passé. Governments needed more flexibility to manage their economies, especially during crises, so they untethered their currencies from any physical anchor. Thus, fiat currency was born, turning governments into the ultimate magicians, creating money out of thin air. Today, fiat currency is the norm around the globe. It's a fundamental element that powers not just economies, but also affects geopolitics, societal structures, and even our daily choices. Central banks control its flow, playing a balancing act between too much and too little, which can lead to economic boom or bust. This power to control money supply allows governments to steer economies during downturns through practices like quantitative easing, fancy term for printing more money. While it can help in tough times, it also raises a big question. If you can always print more money, what is it really worth? Spoiler: it's complicated. Moreover, the value of fiat money isn't just determined by economic policies, but also by international faith in that currency. For instance, the US dollar holds a special place globally, not just because of America's economic muscle, but because of the vast network of trust and debt it has built with the rest of the world. This trust is a delicate balance, and if it falters, so does the value of the dollar. Devaluation is like a sneaky tax that nibbles away at your purchasing power without you even realizing it. One day, you can buy a whole pizza with $10, and the next, you're just getting a slice. This hidden tax is especially painful in countries with rampant inflation, where people's life savings can evaporate overnight. The reason behind this sneaky theft? Often it's because governments keep printing money to cover debts or fund ambitious projects. More money chasing the same amount of goods leads to price rises, essentially diluting the value of each dollar in your pocket. It's like watering down your favorite drink. You still have a full cup, but it just doesn't taste as good. What's more troubling is that those who can least afford it are hit the hardest. While the rich can hedge against inflation by investing in assets, the average Joe's cash savings just melt away. This creates a wider gap between the haves and the have-nots, fueling social and economic disparity. It's a global game of monopoly where the rules are definitely not in favor of the little guy. Enter cryptocurrencies, digital, decentralized money that could potentially dethrone fiat currency. Bitcoin, the first and most famous crypto, promised a revolution. It was supposed to be the currency that wasn't controlled by any central authority, immune to manipulation. Sounds perfect, right? But as with all great ideas, reality is a bit messier. Cryptocurrencies are wildly volatile. Sure, you could be a millionaire overnight, but you could also lose it all just as fast. Plus, the energy consumption of Bitcoin mining has environmentalists in a twist. It's not exactly the green revolution we've been hoping for. Yet, despite its flaws, crypto continues to grow in popularity, especially among those disillusioned with traditional banking systems. It's a bit like the punk rock of finance, not fully mainstream, but definitely shaking up the status quo. Whether it will become the new norm or remain a financial wildcard remains to be seen. The future of money might seem like something out of a sci-fi novel. Imagine a world where your biometrics are all you need to make a payment. No more wallets, just your face or fingerprint. Or consider digital currencies issued by governments themselves, combining the credibility of fiat with the technology of crypto. These possibilities are not as far off as they might seem. Countries like China are already experimenting with digital yuan, pushing us closer to a cashless society. But with great power comes great responsibility and potential for abuse. The line between convenience and surveillance could get uncomfortably blurry. This evolution also challenges the very concept of money. If money becomes completely digital, what happens during a blackout? Do we risk too much by putting all our eggs in the digital basket? These are the questions we must grapple with as we stride into the future. So, after this whirlwind tour through the realm of fiat currency, cryptocurrencies, and the future of money, we're left with some burning questions. Does the promise of stability with fiat justify its susceptibility to manipulation? Is the freedom offered by crypto worth the risk of its volatility? These aren't just rhetorical questions for your next dinner party debate. They're real issues that will shape our economic landscape in the coming years. So, what do you think? Is money really worth what we think it is? Or is it all just a grand illusion set to the tune of governmental orchestration? Let's hear your thoughts, because in the end, the true value of money may just be what we all agree it is. No more, no less.